Joining us right now to talk markets here on Real Ag Radio is Chuck Penner of LeftField Commodity Research, based out of the most friendliest of Winnipeg, Manitoba. How are you doing, Chuck?
Doing okay.
Okay, Chuck, markets. I guess the equity market is extremely focused on impact of tariffs, threats of tariffs. How's the commodity market reacting to all of this right now?
Well, I think it's kind of maybe in a bit of a period of wishful thinking or hoping all of this just goes away. For the most part, our commodities that we're trading with the U.S. are still under the USMCA or the CUSMA or the depending which country you're in, how the abbreviation goes. But those are still under that agreement, and so we've been able to avoid that for the most part for our ag commodities, and that can always change. My expectation though is that the worst of that turmoil is past, and now some more logical thinking is occurring, and so on. So I'm kind of hoping on that front, we're seeing that kind of fade away. I think China is still a bit of a wild card. There are people who have suggested that, well, maybe China will scale back the tariffs on peas and on canola products and so on. I think that's more wishful thinking than anything. And then there's always the possibility that they slap some tariffs on canola seed yet too. So there is that kind of stuff. But I think the most part, markets are trading more on fundamentals, and now we're getting into the weather season for a lot of these crops and things like that. So there's just a lot more buzz about that. That doesn't mean this has disappeared entirely, but we're getting back to thinking about the things we usually think about.
Yeah, so if we are focused on fundamentals right now, are they becoming more of the focus? What are the fundamentals telling us about the broader market?
Well, we're really watching what's going on we start in the wheat market and we're watching what goes on in the winter wheat market. And then, of course, then we're starting to see planting of the spring wheat crop and so on. There are areas of concern of dryness. I was looking at a map yesterday of Western Canada, and, that northern tier of the prairies, really hasn't had any rain in the last 30 days. And it's been drier already a little bit earlier in the year. So not that it's a imminent problem, but it's a concern. Northern U.S., Montana, especially eastern Montana, western North Dakota, those are drying out as well too. So those kind of things that are specific to crops that we grow here are starting to uh, become a little more prominent. Again, we're just getting into seeding now, so you can't really kill the crop yet, and so we hope for the best. But those are things that we're watching anyway.
Yeah, and U.S. planting progress has, it's been pretty healthy.
Yeah, people get wound up about, oh, corn planting is 2% behind average, and like, come on, they can make that up in an afternoon. It's really not a big deal. But people like me need something to talk about, I suppose, and so we latch onto some unimportant statistic and try to move the markets or claim that the markets move because of that when it may be other things going on too.
So I know you're big on seasonality. And so
Yes.
we're at the back end of April here, last day of April. Seasonally speaking, what does this tell us in terms of where we go from here?
Yeah, I mean, each crop kind of has a little bit different seasonal pattern, and so we track each of them differently. So there are some, like Durham, for example, tends to just like start in January and start sliding lower for until it hits the harvest lows. Other ones like spring wheat or canola or red lentils, for example, there is a real pattern toward a seasonal. A spring peak in the seasonals. Now, spring wheat hasn't really moved at all. The basis has improved, but spring wheat really hasn't improved much at all in the spring months. Canola has. Red lentils have been pretty flat as well too. But one of the universals across basically all crops is that once you kind of get to, at latest early June, early to mid June, prices just slide during the summer, and then everybody goes bananas again and thinks, oh, there's something terribly wrong with the market, and why is it doing this? Well, it does that every summer,
Mm.
and so if there are people who need to get some pricing done, probably want to look at getting that done sooner rather than later because that seasonal tendency is almost inevitable. I mean, 21, 22 was maybe the exception. Even then, there was it started to decline, and then when the drought really kicked in, then it bounced fairly quickly.
Yeah.
But it happens like every year, and so even in canola that looks really strong, and there's really good reasons for canola to be strong. There's tight supplies, and we're still moving and crushing, still exporting and crushing at a really good clip, and so on. There's really good reasons to think that market should just keep going a higher, you know,
Yeah.
until whenever. But it's not going to. Like I can, there's no guarantees, but I can almost guarantee that one at some point. It may be delayed by a week or two or something like that, and it may not be a large dip, but it's gonna do it at some point.
Yeah. So curious, and this is a broad question. So different commodities may behave differently, but do the spreads maintain as we see that slumber or summer doldrum and we see a bit of a drop off? Do the spreads hold?
Um, that July Nov spread in canola is really a tough one. I mean, it's one to watch now. I mean, we got a what have we got? We've got a $40 inverse right now, July Nov spread, and again, that's a signal that at some point the buyers are just going to back away. The crushers have the coverage that they need, but that spread. It doesn't always narrow in the way the textbooks say it should, and so the other spreads, if you look at the Nov Jan, we've got about $8 there, which is close to full carry, so that's fairly normal. So it's looking already ahead to next year and saying, we're at this point anyway, we're looking at a more reasonable supply situation.
Yeah, you mentioned on canola, there's a good fundamental story that may have some people listening to this and scratching their head because I thought there was nothing but trouble in the canola market. Is the bulk of that product still making its way because it's seed going to China, or is it crushed product going to the U.S. for renewable diesel and SAF, or what's happening?
Yeah, when we look at the canola market, I mean, we've looked at it a lot actually in the last while. We've had some extra research work and things like that surrounding that. And we've always said that the 24-25 season isn't really going to get affected by that because we have drawn down supplies so much this year already. This year isn't really going to get affected by that, and so that's why we're seeing this year's move, there. But those are still large risks from China on the seed. Again, don't know for sure they're going to do that, or when they're going to do that, or that sort of thing. It would also help, for example, if China would start allowing Australian canola in, because then where Australian canola is going, Canadian canola can go to, right? But the situation in the U.S. with their biofuels policy, I think, is even aside from tariffs that might show up on from the U.S., which I'm kind of discounting now, but the changes in biofuel policy, because when we look at where our canola oil has gone the last couple of months, January and February, it's already started to shift away from the U.S.
Mm.
They're still the main buyer. Don't get me
Yeah.
wrong, and they will remain that way. But we're starting to send it to more different places. Now, the March crush volumes were back up again, so there's no, that's a positive sign that we're going to keep crushing and moving it, whether it's to the U.S. or to somewhere else. But there are risks. There still are risks in that market for sure.
There's been a lot of bullish commentary coming out of the White House and some members of the cabinet in regards to the U.S. having some sort of a trade deal with India. How could, and of course we're speculating here. We don't know what that would actually involve and entail. India is a very difficult trade partner on a good day. Any impacts there you're watching for from a U.S. or from a Canadian export perspective? We need to be like watching out for.
I don't really think so. What they've done in the past, for example, they arranged a trade deal with Australia. So Australian lentils come in at a 5% tariff, Canadian lentils at a 10% tariff. So there is a price impact in Canada, in order to keep getting our lentils moving into India, but it's not a huge deal. When it comes to the U.S., they might export some green lentils there. Not really any peas at now already. So from the pulses perspective, and that would be the effect. I don't think that the U.S. has a whole lot that India wants, to put it bluntly, in terms of pulses, but it makes for good press.
Yeah. Any before we wrap up here, any other commodity that sort of we haven't discussed here, or you want to make sure you hit on that growers need to be aware of in terms of some of the price action?
Yeah, there's been some, when I look at the Durham market, for example, earlier we were, a lot friendlier toward that market, and I think others were as well too. So we weren't necessarily an outlier, but that optimism is fading. Prices in Italy are sliding, which is kind of a bit of a benchmark. They've had rain in North Africa with the harvest getting closer, and we're looking at bigger crops in Morocco, Algeria, Tunisia, bigger Italian crop for sure this year. Very good conditions there. So, some of the optimism, there are still some pretty good new crop pricing opportunities for Durham. And so, I think that's something that should be looked at, because I'm not sure that some of that optimism, I think some of that optimism in the Durham market is maybe going to fade over time, and people are going to be a little disappointed maybe next year.
Well, what about oats? What's going on there?
Well, that's again one that we had a whole lot of uh, angst about, with respect to the U.S. market, and so far that doesn't seem to be playing out. And again, I don't think that at this stage that the U.S. is going to all of a sudden, okay, now we're going to impose on tariffs on Canadian ag products and oats. The USMCA, or whatever you want to call it, will being renegotiated in 26. That may have an effect a little bit later on, but I think most of the food products and that kind of thing are really going to be able to slide under the radar on those, and keep going. So on the oat market, it's looking stable, friendly-ish. But the U.S. isn't buying. The last couple of years haven't bought as much as they used to buy. So we can probably do with a little bit smaller crop here.
Are they getting their oats elsewhere, or are they just demands decreased?
I think they're getting more domestically,
Okay.
from what I can see anyway. So consumption is still the same, but they grow like lots of oats, but they only typically take about a third of their oats to harvest. So doesn't take much to change that balance.
Yeah. Chuck, thanks a lot for joining us here today. Really appreciate it.
You bet, Sean.